Well, hello, everyone, and welcome to episode 110 of the Automation Station here with the Peakbot team. I am your co-founder and co-host, Dylan, joined by Ben and Thomas today. Happy Friday, gentlemen. How are we doing?
Made it another week.
Yep.
Hardly.
That's an accomplishment in my book.
Yes.
In this game, in this market, it is. Thomas, what's up with you, man?
Not much. Just working, chugging along each and every day.
You
How'd the
doing more
market treat
working
you?
or chugging lately?
Maybe tomorrow we'll be chugging.
Yeah, weekend. Big weekend here in the States. St. Patrick's Day. A lot of celebrations, a lot of parades, a lot of beers. So, yeah, that'll be fun. But got a great show. We need a little music. Let's get a little music going on in the background.
I got it. You
We
can
got a
We're
great
gonna
show.
go with some dubstep. I think it's dubstep.
Well, I don't know. There's only so many options. Ben's going with night driving. Anyway, episode 110. We got an action-packed schedule here. We got a lot of Peakbot picks content. All right, we're going to look at how we did last week with trades that we are actually selected
Hey,
off.
closer to the mic.
We actually selected off of our watch list. How's that? Is that better?
Yeah, it's better.
Not bad.
And took the trades ourselves, fully automated in our portfolios. We have the tracking document. We're going to go look at those, and we're going to make our picks for this week. I've been studying the charts for the last half hour here. Feel pretty good about my picks. We'll see if things move on us last minute, but we'll also take a look at some economic events going into next week, maybe do a little SPY analysis, as I know each of us have done ours going into these, and Trader Trivia, which I didn't forget today.
Nice.
So Trader Trivia coming at you in just a little bit. So hang tight. We're going to be handing out a free 3 months of Peakbot's standard quarterly subscription, $177 value. So hang tight. Gentlemen, I mean, crazy market, huh? Are we officially, by the way, I see some posts, I'm not validating this. Are we officially in a bear market? Like officially?
We're
Down
in
over-
correction territory.
The
Yeah,
correction?
Not quite a bear market yet.
Okay.
I think
all right.
because we bounced off of like the 200-day EMA, we ended up reverting back over it or something.
Yeah, because we're down close to 9% on the month. I think 8.5%, maybe. At least that was what I looked at a couple.
Yeah.
And can you
no.
put the 200-day EMA on there just for reference? I feel like that's a pretty popular indicator to throw up.
I'm changing the music.
So
Dip
what
below.
we are below, and the 200-day EMA is reverting down, which is scaring people.
Yeah.
That usually acts as a line of support. I mean, you can look at it historically.
But
It
when
usually
it's
acts
moving,
as a line of support.
when it curls down, now it's acting as a point of resistance,
Yes.
which that's the scary part. And the last time we
So-
saw that was back in, for a very short period of time, back in 2023. And then, of course, from
COVID.
in 2022, pretty much all year, we were
Mhm.
trending downwards. And you can kind of see, like, it's not a perfect science, right? But you can see, like, in August, like, we popped up above the 200 EMA for a
Correct.
little bit of time, then right back down. So it did form some sort of resistance. And then same thing in December. And then again in February. So bouncing back and forth until finally it did curl up and kept going up. And that's when we started our bull run up until now, with a couple pullbacks here and there.
Of course.
But anyways, we should be getting some Iron Condor trades in here. You'll
Yes.
notice that I've got no orders today. I got one open position, no other open positions. Why is that? Well, I wasn't trading condors this week because of all of the economic events that have been happening. I've been choosing to stay on the sidelines and let my bots have a break. Not that they need a break, but maybe I'm more so giving my portfolio a break. But the trend spread strategies, or the trend spread tickers that I was trading, they took profit earlier this week, and there we go. Boom, my
There you
Iron
go.
Condors. Hands up.
Ends up
Didn't do
Dylan.
anything to do that. Looks like a
Condors are in.
good fill on XSP. We got 44 cents. IWM got 40 cents. I love higher fills on IWM. Looks like we created a $5 wide condor. Okay, happy about that. SSP, we did a $11 wide condor. So I like where that's going. I'm happy with these positions. Did you guys get any condors to go through just now?
Not in
No,
Not trading them?
No, not
Gotcha.
trading them.
Well, now you can see my condors here. We'll go over in Peakbot Picks what won for me this week and how the other guys did. My SQQQ position is a wheel position. I'm feeling pretty confident about that. I'm going to take profit there. The whole idea here is I need to stay above this 34.5 strike price. SQQQ is currently almost at $37. Just needs to stay above 34.50 till the end of the day. So unless the Qs go bonkers and increase insanely, I'm pretty safe. I'm set to earn 54 minus 11. I'm set to earn $43 on that. So $43 in addition to the money on trend spread. This was a pretty good week for me.
So SQQQ, was that one of your picks or no? I'm sorry if I missed that.
No, not one of my picks, but it is my wheel play.
Yes. Okay. Very good.
So you want to be short long term, Ben?
So SQQQ is the inverse of the Qs, 3x leveraged ETF, which means, yes, I am short QQQ, even though I'm long SQQQ.
Yes.
And that's how you could play the wheel in a bearish market. You could look for inverse ETFs, so ETFs that play bearish moves, or you could look for tickers that have a negative beta, because beta shows the correlation between a stock price and the overall market. If a beta is -1, that means for every 1% the market moves, or $1 the market moves. No, I think it's percent.
No, it's dollar.
It's dollar. Okay. That stock will move in the opposite direction proportionally.
Yep.
So why don't we get into a little bit of trader trivia? How does that sound, guys?
Let's do it.
Do it.
Cool. So for anybody new that hasn't watched this show before, this is how trader trivia works. We go ahead, we ask this question on the left-hand side here. We give you a couple minutes. We're going to have a fun fact in between. We give you a couple minutes to text the answer into 973-888-1166. If you text the correct answer into that phone number, we're going to text you back with a coupon code for a free 3 months of Peakbot. So if you've been thinking, hey, I want to try trading bots, I want to try some automation tools in the industry, but you don't necessarily want to pay for them, well, now you don't have to. You can try us for free for 3 full months. So with that, here is the question, text it in. Which of the following is a key characteristic of a call option in stock trading? Is it A, it gives the right to sell a stock at a specific price? B, it gives the right to buy a stock at a specific price? C, it requires you to buy stock at market price? Or D, it guarantees you a profit no matter the market movement? So think about that. Text your answer in A, B, C, or D to the phone number on screen, and you could find yourself automating by the end of the day.
Yeah, you can. We got a lot of action going on today where there's trade entries and windows around 2:30 Eastern. And I realized my trend spread picks, I was so concerned with like starting the show and getting these picks selected and charted, and I didn't add them into my bot until literally 12. So I might be getting the late window today. We'll see if I have entries before the end of the show. Yeah, no condors for me. I try to pick one or two plays a week for the condor, and over the weekend scares me.
Hey, get picky about it.
Get picky.
You know,
I'm getting
this
picky
is man
about it.
and machine.
Yeah. Plus, I'm holding Walmart, so that's fun. No, it isn't. It hasn't been fun.
So let's talk about this. Did you know, a little fun fact here. Did you guys know that the New York Stock Exchange was originally founded as a place for stockbrokers to meet under a tree in 1792? There were 24 brokers that signed the Buttonwood Agreement under a buttonwood tree on Wall Street. That's back when there were trees in New York City. So they all agreed that there was going to be a set of rules that they could trade under, and that eventually laid the foundation for what is now the world's largest stock exchange. All
Wow.
started under a buttonwood tree. And of course, I had to look up what a buttonwood tree is. Looks like this. So I think there are still buttonwood trees in New York City, because that's what I imagine a city tree to look like.
So I was picturing a bigger tree. Truthfully.
Yeah.
Well, yeah, you think about it, like they fit 24 people under that.
Yeah. Those people were smaller back then.
People were smaller.
Here's New York City. Where's your screen? I got to take yours off. Here's New York City. I Googled 1792. Why can't we get this stage? What's going on? Okay. New York City, 1792. All right.
Blow that up.
Yeah. So this is like what we're talking about. Look, hey, that might be This might be it.
That might be the
be it.
buttonwood tree.
That might be the event. Could be. Look, that's New York City in 1792. You know,
Different world.
Completely.
different world, but trading equities. So just think about that.
I wonder how many tickers they made available on the first day.
I don't think tickers existed yet.
Yeah, I don't know what they were. What do we think they were trading? We've had fun facts about the first things ever traded. I don't know about on the NYSE.
They were probably trading like tea.
No.
Land.
No, I'm sure they were trading companies. I mean, there was companies around in 1776, right? When the United States got founded.
Google search. Google.
I did it.
Most popular company in 1792.
Well, the first thing traded on the New York Stock Exchange was the Bank of New York.
Yeah.
It was
Yeah, but that
founded in
wasn't-
1792. Yeah.
Well, I guess they had to have made companies public in 1790.
Oh, here it is. Initially, the only securities traded were government bonds and bank stocks. There you go.
Makes sense.
So that's what they were doing. They had
I was gonna
banks.
say, because Bank of New York Mellon wasn't until the 1800s, right?
Maybe that was maybe the actual first stock traded
First
and
company.
listed.
I think so.
Yes. Okay. Well, hey, we're learning today.
Yeah.
This buttonwood agreement is showing up right even on New York Stock Exchange website. So Ben, tell GPT, good job today.
Good job, GPT. All right, are we ready for this answer?
Yeah, let's do it.
The answer is B. So a key characteristic of a call option is the right to buy a stock at a specific price. So a call gives the option holder the right, but not the obligation. So you don't have to, but you can, to buy a stock at a specific price called the strike price. You'll hear us reference that term quite a bit on this show, strike price, within a certain time frame. That time frame is ended with the expiration date. Again, another term that we talk a lot about here. If the stock price rises above that strike price, the option holder can buy those stocks at the strike price, which is lower than the current price, therefore giving the option holder a gain in that position at that moment. Or you could just sell that contract at a higher price than you bought it for and profit off of that, so you never actually have to buy the shares themselves.
Yeah,
So.
You know what? You got me lost in this, and in fact, I'm on the New York Stock Exchange website, History of NYSE, and just for the people, I think this is cool. Let's get me on stage here. Come on, what are we doing? Remove ad. I hate this new feature. All right, here's the original buttonwood agreement. This is it. Here it is, 1792. All right, history.
Is that John Hancock?
There's no way.
I saw
I'm
a
reading, like,
J.H.
Sutton Hardy. Oh,
No, look on the
John
left
A.
side.
Oh, I don't know. Oh, I feel like half of the men alive back then were probably named John.
Yeah.
So here's the New York Stock Exchange on Broad Street in 1868. Look at the floor in 1881. 1881. Come on, that's crazy. 1903. All right. And then this is the Depression, market crash in 29. People coming saying, "Where's my money?" First female permanent member in 67. Right. Anyway, just That was cool. I wanted
Those
to
are the
share.
original finance bros. Everybody that signed those now became the first
Those
founding
are the
I heard
finance.
I heard they had Patagonia vests back then too.
Yeah. One of
They
them
need-
has to be the last name Patagonia. That's it.
John Patagonia.
John Patagonia.
That's actually who was on the list. Yeah,
He was probably like 5'2".
yeah, definitely. Horrible teeth.
All of them.
Horrible
People died
hygiene.
from bad teeth back then.
Yeah, it goes right
Yeah.
to your brain. All right, very cool.
So let's flip back over to some real trading stuff.
Yeah. Hey, that's not that wasn't real.
No, you're right.
We're on
I got my
historical trade.
trend spread positions in while we were doing all of that. Let's see how we did because I have no idea how this.
I like
filled
the
out.
silver approach, Ben. I went with
Whoa. Oh, okay.
the
Sorry.
prettier one.
So these
I went
are
with
my
gold.
picks for the week. We'll go over in detail in a little bit, but silver, I got $1 spread, collecting 16 cents on it. That's great. XOM, $3 spread, very nice. 63 cents. That's about a 20% ROI, which is what I was shooting for. CELH got a $3 spread, 41 cents. Bearish on it. We will look at that because I think I was expecting maybe a condor, but that could have changed. Which I'm actually happy with a one-sided play there. So, what do you guys say? We should start reviewing last week's picks.
Yeah.
Right now. Who wants to go first?
Do we want to go over our last week's picks and this week's picks at the same time?
We can kind of go round robin.
Okay.
Yeah. Who goes first? I'm putting mine in right now. I have the info if we want to do it.
I can go first if you want.
All right, go ahead.
Let me share screen. Well, you're going to see screens up.
Screen. Ben, even when your screen's off, it's like still needs to be removed from the stage. It's really silly.
All right. So, 3 picks. This one is still teetering in the money. So Peakbot sold a $72 put. So sold a put credit spread selling the $72 strike, buying the $68, earning $74 in profit. So definitely a pretty solid ROI there. Right now we're trading at 71.62. So I'm looking to get probably about a partial win here, just teetering in the money, but we are pumping back up considering this morning we were trading pretty low in the low 70s here. So I do think we're still going to pump up. Maybe I can go up 40 cents on the day with this market push to keep going here. So this is the only one that I have that's in the money. The other 2 are out of the money, but are close, but not close enough for me to be worried about it. So the next one is going to be let me just restart there. XOM. So another oil stock. Love the low volatile oil stocks. Peakbot sold the 112 for me. So again, this one is teetering right there. We are close. I don't want it to pump up too much, but I think we'll be good. We'll probably see a little bit of a pullback to end off the day. Unfortunately, I couldn't get any profit taken on this one, which would have been nice. However, we've just been kind of consolidating each day. Haven't really seen too much price movement. So the position is still open, just letting Theta Decay kind of work its magic. And the other one that I have is Oxy. So another short on an oil stock. I believe this one is still good. Yes, we are very, very good on this one. So Peakbot sold the $48 strike price for me. The reason, again, I really like this one, it was a clear point of resistance. We even touched it the other day and bounced right off of it. So we are solid, still good. Sold 48, currently 46.47 to earn $28 in premium on it. So right now, 2 for 3.
Awesome.
Nice.
Very good. Very good. We'll get that sheet updated whenever you can. Only can call you out on air because
Call him out. Tom,
because it's easier to see, especially when you're not zoomed in on the screen. Anyway, Ben, me or you?
I can take it. Let me
right.
get my screen back up here. I'm going to share. Wait a bit here. So my picks from last week were QCOM, UVXY, TZA. We can see I earned $58, $65, and $30 in premium at the entry for all of those. And then I took home about $110 worth of profit, pumped about that. So let's take a look at these trades. First, we've got Qualcomm. So Qualcomm, I sold a call credit spread on Qualcomm, and I'll flip back over to my Tradier account. Actually, not yet, because that's my current positions. So Qualcomm, I wound up selling the 165 strike, which on screen here, you can see that horizontal line is 165 strike. The vertical line is the date of entry. Got in, needed Qualcomm to stay below 165. It did indeed. And if I was still holding the position, it would still be profitable, even though we have a green day today. Could have collected full premium, but hey, the bot saw I was in a position of profit on Tuesday. It took my exposure off of the table on Tuesday for about a 70% profit. I'm not going to complain about that. Next ticker is UVXY. UVXY. This is a ETF for VIX for short-term futures. So volatility on short-term futures, which we know has been increasing. So I was bullish on UVXY with a strike price of $23, which is where this horizontal line on the chart is at. I got in on this bar right here. So we needed to stay above this $23 level. We did indeed stay above that. And I did not. The bot did. The bot took profit for me on this one as well. I believe that took profit also on a Tuesday. So on Tuesday of this week, both QCOM and UVXY took about a 70% profit for me. And then finally, we have ticker TZA, which was another bull play, a put credit spread at the 1550 strike. So needed to stay above that. Again, we did. So 3 for 3 on the picks. I already took profit. Profit took yesterday for an 80% win. And when adding all of these up, I went 3 for 3 this week at $110 in premium. Very happy about those trades.
Well done, man. Ben, you're kind of crushing the new Peakbot Picks contest, at least from what I'm thinking here. So, well done. We're going to talk through mine here. I'm going to get my screen pulled up. Now, we have to figure out, it's a loser. We can't possibly count this as a W. But my Walmart position, as we know, I've been selecting wheel trades. Okay, so I was assigned on Walmart last week, which meant this week I sold a combo spread. Okay, a sold call and a bought put. All right, so I had sold the $91 call and bought the $82 put. Now, if we look in my account here, fellas, we'll notice that that position itself is out of the money and is profitable. So I need opinions here, right? The trade itself is a winner this week, but my shares, I'm down $1,300. I own Walmart at $98 a share. It's trading at 85. So
Yikes.
Although the trade this week, as we can see, out of the money and profitable, I don't know. We can't really count that as a W. I mean, but at the same time, this is the beginning of me digging out of the hole. I earned my premium this week. It's going to be a W on that trade. I'm getting back in the right. Now I own the shares, but I mean, what do you guys think on that? And I didn't choose a Walmart. I didn't choose a wheel this week. I'm going.
Yeah, that's kind of why I feel like wheels shouldn't be allowed for this contest.
Let's count it as an L because I lost way too much money for me to be like thinking it's a win. Unless you guys, I mean, there's two sides of looking at it. You know, I did that
spread
trade
won, but the shares didn't.
That trade won.
I think you don't count it as a win or a loss.
All right, deal. We're gonna just keep that open for now. Let's take a look at the other things we had going on here.
By the way, Dylan, if I were you, just not financial advice, but friendly advice. I don't think I would continue to sell calls on Walmart. If you're truly bullish on Walmart, just hold the shares.
Yeah.
Long-term play for you. Let the price recover.
Right. And what we were talking about also maybe making an adjustment to the wheel to where if assigned, you sell the strike in which you were assigned at. We haven't made any decisions on that just yet. But yeah, I have that turned off for this week. So I had a winner on HPQ. I had a call credit spread, as we'll see here. We just took a $1 debit on it. It didn't feel very high initially. It didn't earn too much premium. It was $9 and took away an $8 win. But we were trying to stay under $31. And as we can see, we were out of the money the entire time. All right. So this hasn't traded over 31 since the end of February. Just a good trade over the last 5 days here. We can see our strikes not even within sight. So good trade there. Traded that on a couple other accounts with more contracts. So I did pile up a few more than $8 on that this week. I did lose on Coca-Cola. I had a bullish put credit spread on KO. I was trying to stay above $69. This one's unfortunate. Here's the last 5 days on Coca-Cola. Now, I was bullish on the stock. As we can see, I'm about as wrong as we can be for the last 5 days, right? But I was still, until today, we opened up pretty low and it's come back a bit, was flirting at the money here. Okay, right now, it would be in the money, but the bot rolled over or closed out the contract as it was set to smart exit. So I took a $20 debit on a contract that I earned $7 in premium on. So it's a $13 loss on that. So we're going to say 1 for 2, if we will. We'll take Walmart out of there for now. But overall, brutal week for me based on holding those Walmart shares. I am going to hold them until we get back up. I'm still very bullish on that stock, and analyst projections stay the same. So that's my week last week. Not so profitable for your boy. We'll see what we can do this week.
All right.
Speaking of this week, right back around.
Let's get right back around. Thomas, you want to kick us off, or you handling some customer service requests?
We are good at the moment. Let me go back to sharing my screen. Share screen. All right, there we go. All right, throw me up there.
Do you know how to do it? Can you do it?
Not on the account I'm on right now. I didn't join through Experience.
You think you'll maybe ever upgrade to TradingView and do?
I like this one. Do you want me to
zoom in on it? Let us see it then.
All right, we're good right here, right?
All right, yeah, that's pretty good.
All right, so we're on 2 bearish, 1 bullish for the week. I did decide to go bearish or bullish on GLD. So I think some of you guys might have seen Ben's pick there, bullish on silver. I wanted to go bullish on gold. So right now, I don't know if you're paying attention to the market at all. The big fear is stagflation. So stagflation is when you're in a recession while there's inflation. So with that, a lot of people like to turn to precious metals and commodities, which is why you're seeing all-time highs in gold and silver. And I think I'm going to continue to ride this wave. So right now, Peakbot has sold me a $72 put credit spread, buying the 267. So my spread is a little bit wide, but I really like to hear about the 272 is that it's acted as a point of resistance in the past, and we had to clearly break through it. So I think what was once resistance could become support, even if we do fall through. I do want to make sure that I am hedged a little bit, right? With this market acting a little bit crazy, I want to make sure that I'm a little bit inverse with it as well. So having GLD up there is going to help. The next one I am is going to be XOM again. Well, now I'm on TradingView. All right.
We're here.
Somehow we opened up TradingView here.
Don't fight
it. Roll with it.
Let's roll with it. I meant to do this. So we're on TradingView now. We sold.
He's so lost.
I'm going.
He's like a baby deer running across the highway.
Yeah, I don't know what happened there. I don't know how TradingView got open, but we're going back to speed things up here. So we have sold the 114 strike price Again, right here, 112 is some resistance. Next up is maybe 115, but 114 was around support there in the past. In this previous chop where we're kind of right now. So I do think that if we do go up, I think we're going to hit 114, probably pop back down. So I do think that's my next strike price or the next price that it goes to. And then one of our favorites to go short on is Schwab, SCHW. So I'm going short on
Schwab because
Schwab.
everybody's moving to Tradier.
Exactly. Short Schwab moved to Tradier. Peakbot sold the $80 strike price. So we are pumping up today a little bit. However, I do think $80 can be a point of resistance. It's acted as support. We broke below it. So I do think even if we do go up, we're probably going to fall below it again just to kind of retest it. So I do think Schwab going short is going to be good. Everybody moved to Tradier so that Schwab falls a little bit, and my pick is safe. So those are going to be my 3 picks. Again, short Schwab, short XOM, long on gold.
Awesome.
Noise.
Ben,
Cool.
near you, man.
I'll take it. I will take it. Oh, just removed you from the stage.
Get him out of there.
All right, here we go. I've got some positions already opened, as we saw. We'll start with CELH. I don't love what the bot did for me here. And you're not always going to love what the bot does for you. And I might manually adjust because I don't like what the bot did for me. So
all right, let's talk about it.
Before, when I was looking at our alerts page, it was telling me that CELH was going to sell the $29.50 strike, which is all the way up here. Now, perhaps since then, and we'll take a look at the 15-minute chart. Since then, since I looked at it, we haven't really dropped that much. I really like the 29.5 strike. So the fact that I'm not getting that anymore, I'm kind of upset about it. I might call an audible and get into a trade in the later window because there is another trading window for trend spread. But for CELH, I sold now the $28 strike, which is, I'm going to get rid of this line, which is this horizontal line right here. So I need to stay below, this is a put or call credit spread, bearish play. I need to stay below that line. Now it looks like $28 has been a point of some sort of resistance previously. It looks like we did also have a small gap to fill here. We kind of rejected off of that $24 level. Could we just flatten out between $28 and $24? Yes, we could, but I don't know. Being $1.25 away from this strike price with the VIX kind of cooling down and maybe the market pulling back up for a week or so, I don't necessarily love this play. I did collect 41 cents in premium for a $3 spread. So that's a little over, that's about a 13% ROI. Again, not the best, not the worst. But let's move on to XOM. So like Thomas, I am trading XOM. Got in at the 113 strike. I do love this play. So maybe I just double down on this. We'll see. Another $3 spread, collected 61 cents in premium. And when we look at the chart, yes, today we were headed back up, but we haven't broken above 113 since December 24th, since Christmas Eve. That's the last time price touched 113. So I am counting on the fact that we are going to stay in this range, no matter the ups and the downs, and finish below 113 this week. So $61 will come into my bank account if that is the case. Finally, silver. And I played silver a couple of weeks ago. I let myself get assigned, and then I sold the shares for a higher price than I was forced to buy them at. So happy with that play. Silver's currently trading at 30.64. My strike price, and this is a bullish play, my strike price is $30. And previously it was $29. I would, of course, love for it to be $29 still. But I feel like this $30 level is going to be a new line of support, especially if we're bouncing a little bit here. We're already forming higher highs since the last top, which means we should probably get higher lows. I'm just hoping that higher low is above $30. So I will be keeping an eye on this position. Probably Probably not manually adjusting, but hey, it's a dollar spread, and I earned 16 cents on it. So that's a 16% ROI on that trade if I let this go till expiration, if I don't take profit early, but I might take profit early, take my risk off the table. So Dylan, while you're going, I'm going to explore CELH and see if I am going to adjust that position at all. If I do, I will make sure to update you guys.
All right, perfect. I love it. Really good analysis, good breakdown, and I like the honest approach of, hey, these fills. That's why we check it so close to the entry time. We're on here live doing you a favor. If we'd be staring at charts here a little bit longer. Again, this is man and machine, so you got to keep an eye on the fills. Trade opportunities are resetting every second. So let's pull this up here and we'll take a look at my picks. Now, I did just get in on all 3 of these picks on Tradier, so we'll take a look at those actual fills in just a second. All right. But so for week 5 here, 3 trend spread selections for me. Bullish on TLT, bearish on Wayfair, bearish on Bank of America. All right. So total premium earned, Ben, I think it was the exact, did you say $61? I'm also trying to take home $61 here in premium collected today. Hopefully I can hold on to all of it. Cash put out total, I had a $1.50 spread, a $3 spread, and a $1 spread. I'm sorry for all the zooming here. So that's $5.50. So we're looking at total ROI on these trades, about 11%. All right, 61 out of 550. Now let's take a closer look at the trades themselves. Now TLT, it's a $1.50 spread. My sold put is at $89. So that's what I'm trying to stay above. Okay. When we look at TLT here, first of all, this vertical line is, let me just zoom in on the screen here. So this vertical line is where it'll expire. I'm starting to do this now, guys. I'm trying to put the expiration date on the chart so I can see how much time is left.
Nice.
And how many bars do I think it can, how much do I think it's going to move before we get here? So we're looking at the daily bars here. TLT, even through this relatively, bearish correction, whatever we want to call it, it was still, still bullish, not too terrible, right? I mean, recovering for the most part here. So when we zoom out again, I feel really good. I must have wiped out my lines on that. Above 89, I feel good about it for $15 in premium. Wayfair, call credit spread, $28 in premium on a $3 spread, trying to stay below 34. So let's look at Wayfair here. First of all, this was a big impact for me. When I looked at the technical analysis for Wayfair over the next week, not a single buy signal, okay? And when we were looking at TLT for the week, again, okay, just about neutral. So Wayfair here, again, love this if we're bearish on it, right? $35 is what we're trying to stay below, okay? So when we look at the last 5 days here, not sure, maybe it needs a second to load. Let's try refreshing. Hopefully we don't lose our lines. Oh, it went to Bank of America. Let's go back to W. All right, trying to stay below 35. When we look at the last few days here, we've been underneath it. We've been right at it and pulling back. So here's the line over the last 5 days. You can see we jumped over it for just a minute at the open on the 12th and came back down. But you can see, looking all the way back to where we had this huge fall off in the beginning of March, that's $35 price point has been tested. And I think it's been a pretty good resistance for us here. So I feel good about Wayfair under 35 when we get here. All right, so that's kind of nice. My visual. And then Bank of America, call credit spread. So bearish for $18 in premium. It's a $1 spread, trying to stay under 42. Now, this was a little bit higher. I think it was at 42.50 or 43 when I was looking at it on the watch list. However, looking at the daily bars here, we've been trading under 42 since March 5th. So, what is it, 6 or 7 trading days under 42. When we look at the last month here, we can see that it's been pretty consistently under it, at least since, again, the last major drop off on the 4th. So, looking forward, okay, I didn't put the line on there, but this is where we're trying to, this would be the line right here. So, breathing room to go, but still feel pretty good about under 42. So those are my picks for this week. And I had my Tradier account up. I'll just show you guys the actual fills here, and then we'll get on with it.
Cool.
So here's TLT for 15. Here's Wayfair for 28. HPQ is from last week. Here's my Bank of America that opened up today. So excellent. Very cool. And here's the positions. And my very, very sad Walmart shares. All right.
Cool. I did make an adjustment to CELH, by the way.
Let's talk about it.
Let's see it.
So I opened up a $1 wide call credit spread on the $29 strike. I am closing down this one. I have it set at 42 cents. If I don't get that by 3:30 today, I'll just adjust to whatever it is. Might take a small loss on that, unfortunately. On the new spread, I earned $11 on a $1 spread, so that's an 11% ROI. Much more favorable risk profile, in my opinion. Much sits better with me. So the bottom horizontal line is the strike that the bot sold for me. I didn't like it. Closing out of that, I sold this top strike price, and it's only a $1 spread versus a $3 spread. So essentially a similar ROI potential, 11% as opposed to, what was it previously, like, I don't know, 13, 14%. So similar ROI, but much lower risk profile. Going to be earning less in premium, of course, but I feel better about this trade because I've got a whole nother dollar to work with, right? SCLH is trading at $27. My previous strike was only $1 away from where it is now. Now it's $2 away. So we need to see close to a 7-8% move up before me to lose this trade. Whereas previously, it would have only taken a 3 or 4% move up. So I'm digging that. I just want to see this fill at hopefully 42 cents, although price is moving against me right now. So I'm actually going to, since I'm not going to look at this until later, I'm going to put this right at the 41 cents that I got in at. So hopefully I just come out flat if price moves back in my favor before the end of the day. This is a call credit spread, so we do want to see CELH move down. And as we can see, we are currently moving on up. But we could bounce off of resistance there and just shoot back down. It looks like for most of the day today, we've been trending down. So we will see where that heads up.
Okay. Solid.
Dylan, rookie mistake. Rookie. Can we still call it a rookie mistake if you do it every week?
We're going to, oh yeah, because it is. I'm resetting myself. We might need a mute jar. But anyway, so do we want to do economic events coming into next week? I think that may be helpful. I believe Ben's probably pulling it up on the back end. And while you're pulling it up, I don't think we need to do technical analysis on SPY, but how do you guys feel going into next week? What are your thoughts generally? Not financial advice.
Slightly bullish. Slightly.
Okay.
I think we're going to go up to meet the 200-day EMA like we saw on the chart, and then we're going to pop back down. I think we'll see a tiny pop.
I kind of agree. I think that the VIX has been decreasing, which usually indicates an increase in price. Not always, but usually. VIX has been decreasing, and we haven't seen the corresponding increase in the market just yet. So I think that will probably come, but I agree with Thomas. I don't know how permanent that bounce back up will be. So yes, I'm cautious moving into next week. And with some economic events coming up, we could be in for a wild ride next week.
Let's see him.
Yeah, I really do think that if we bounce off this 200-day EMA at some point next week, or we can't really close above it, we're dropping. We're in correction territory. We're probably entering a bearish market.
So the events coming up next week are Monday morning, start off hot with retail sales month over month, marked as a high importance event per trading view. Moving right along through the day, not much else going on. I don't know that that's enough for me to want to turn my condors off. The condors will be on for everybody else. As you have already seen, we got into those today, so those positions will expire on Monday. Now, Monday going into Tuesday. Tuesday starts off FOMC. There are building permits, there's housing data, a lot of high importance events pre-market, and then again, moving into FOMC later on that day, 20-year bond auction. And then Wednesday is the big FOMC day. That's where the Fed will announce their interest rate decision. They're going to talk about economic projections. So this always causes a lot of turns in the market, either up or down. So the Iron Condor bot will be off those days. Moving in, and JPAL speaks at 2:30. Moving into Thursday, we've got the Philadelphia Fed Manufacturing Index, which doesn't sound like a lot, but historically we've seen that blow up condors. We've got existing home sales. That's about it. And then Friday, quiet day. So we quiet back down on Friday. So yes, with all these events happening next week, specifically FOMC, who knows what's going to happen. So that's why I like trading these tighter spreads. That's why I adjusted my CELH spread to just $1. If I do lose, hey, it's only $1.
Yeah, I don't have the stomach for anything wider than the $3 spread right now. I just don't have the stomach for it. Yeah, to me, looking at that, I may target. We'll see how the market opens up next week. But yeah, midweek seems a bit treacherous there for condors. Depending if we flatten out a little bit, I might be targeting condors toward the end of next week after FOMC, personally, not financial advice. So, fellas, I think that's it.
I think we're good.
I think we're good to get out of here. So, just a quick, I guess, some housekeeping things. Peakbot's working on a ton of updates to our current strategies and our new strategies. We got an Iron Fly coming out in beta. We have a starter bot, which we'll have more info on as we go through the next few weeks here. A lot of good stuff, right? But right now, correction, maybe future bearish market here, whatever you want to do. Tread carefully, not financial advice, but man and machine, know what you're doing here, know what your bots are doing, keep an eye on things, and that's what we're doing here. So, put a stock trader in your pocket. Go to peakbot.com. If you didn't get Trader Trivia earlier, message us. We'll send you another promo code, and we'll go from there. So we'll be live again Monday morning, 8:30 a.m. Eastern, with Mark Phillips from Harvested Financial on the Man and Machine show. And that's it, fellas. So happy Friday to everybody. Hope you enjoy your weekends. Happy St. Patrick's Day celebration to most of you. Thomas might be enjoying that more so than myself.
Look at that smirk.
Yeah, he's so excited. All right. Thank you so much for tuning in. And as always, we'll see you at the peak.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.